Institutions are here to buy your Bitcoin, and when they buy, they do not sell. Hello and welcome back. It's another beautiful day in the crypto markets. The purpose of today's video is to talk about some very, very large whale buyers that we have lurking in the markets now, hiding in the background, quietly buying up all of the supply, while retail traders, maybe like you, hopefully not like you, are getting scared and flushed out by small price movements. Let's jump right into it. So as I speak to you today, Bitcoin currently at a price of $67,700. We're right back up again. The bounce from a couple of days ago did indeed persist. Let's just get a measurement on that. That was a bounce of 3.8% to where we are right now, and 5.6% to the height of that move where we rejected twice at $68,800. Once again, just to zoom out on this and give you the bigger picture, technically speaking, the picture is fairly bullish. I've spoken about this descending trend line off the highs, which kind of punctuates the downtrend that we've been in since the all-time high here, 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 and here, and how we tried to retest that. We eventually broke through back on the 21st of October. We have now reclaimed that and just coming back down to test it once again, currently at $67,750. Whichever way you slice this, this is looking pretty good. Okay, the next point of resistance, flipped support, was at $66,500. We broke down through that on the 23rd of October, but we reclaimed that level, and we're now well up above that in percentage terms, 1.7% up right now. So for what it's worth, from a technical perspective, all of this is looking pretty healthy. As we know, pullbacks in an up move are a good thing, okay? They mean that the move is more likely to be sustainable, particularly when those pullbacks are getting bought up so aggressively, just like this move was on the 23rd of October. Now, we spoke about how that move was unusual at the time because although there was a lot of short interest in the market, the sentiment overall was very good. And this kind of points towards a bigger picture that I want to talk about today, which is the pattern of whales buying, and particularly whales buying when the market is in fear, when retail specifically is in fear, or at least when weaker hands trading on leverage are in fear. So just looking back at that leverage in the market, as you can see, we've now flipped once again. Now there is more long side leverage in the market. You can see that peaks out by the liquidation risk, at least at $2.62 billion, down at $63,000 in price. That, of course, is way down the chart, but not really out of the question. I mean, it's perfectly possible that we come back down to there again. I think crucially from a charting perspective, what's important about that level is it's still well above the last key support that we put in here on the 10th of October. That is key support because it essentially marks the place that a break of which would then signal a reversal of this uptrend that we've been in since the lows that we put in on the 5th of October. This pattern of leverage is something that we're more accustomed to seeing than what we were seeing a couple of days ago, where the script had kind of flipped, given that we had a lot of greed in the market, but we also had a lot of short leverage. Now, this is kind of back to where we expect it. Also, look at the shorts though. There's still nearly $1.5 billion worth of short liquidation risk up at $70,300. And again, that's super important to the upside because it would confirm a reversal of this mega downtrend that we've been in since the all-time highs. And we still remain in somewhat greed in the market. But what I want to point out though is a couple of days ago when everyone was getting short, who was buying? The big players were buying again. So we did see an outflow day on the 22nd of October, $79.1 million. It's crazy to say, but that's actually a really small flow in either direction for the ETFs over the last week or so. A little bit longer than a week actually, but straight away on the 23rd, we printed nearly a $200 million net inflow into the ETFs. And then yesterday on the 24th, $188 million net inflow day again into the spot Bitcoin ETFs. Always led by BlackRock. In fact, that outflow day had nothing to do with BlackRock. That outflow day was a $134.7 million net outflow from ARK. BlackRock added $43 million, and they added $317 million on the 23rd, and they added $165 million on the 24th. But BlackRock is not the only whale buying. Take a look at this. Microsoft shareholder proposes the firm look into investing in Bitcoin. This is just the next of the large corporates to start realizing the long-term potential of investing in Bitcoin. Microsoft's board is recommending voting against it, arguing they already evaluate a wide range of investable assets, including Bitcoin. But in an October 24th filing, Microsoft disclosed that assessment of investing in Bitcoin is proposed to certain shareholders who will vote in a December the 10th meeting. It also came out very recently on the 23rd of October, as this article is dated, Tesla have not sold any of their Bitcoin holdings in Q3. According to Tesla's Q3 financial filings, the company's automotive sales declined slightly since Q2 2024, while leases increased slightly. Revenue for Q3 was north of $25.18 billion. There was some FUD that they might have been selling, but most importantly, in fact, revealed by Arkham Intelligence that they had not sold any of their holdings. Case in point, big corporations buy when you're scared, hopefully not you, and they do not sell. Act like the institutions do. Don't act like a retail sheep. But that is not financial advice. That's just my opinion. Plenty more to come. Catch you in the next one. Bye.